So how do you quit your job in 1 to 3 years? Now, a lot of people would wonder, is this some kind of scam? How in the world can someone quit a great corporate job like I did in less than 3 years? And really how I did it was through someone like Michael Blanc, who taught me about multifamily investing, about how you can leverage your time, you can learn new skills, and you can raise money and do amazing big apartment deals. And now years later, I have left my corporate job and I've just living a whole different life. So Michael, welcome. How are you today?
Hey, Bronson, great to be here. Thanks so much.
Really great to have you. So the question on everybody's mind is, how does someone leave their job in 1 to 3 years?
I don't know. How did you do it?
Well, this isn't my show. This is yours. I can tell you I did it, but you're the one that really helped me kind of give me some tools to do that. So why don't you talk about?
That's good. I mean, it took me 15 years, so you're quite ahead for me. But I mean, to answer your question, it's surprising, really. It's you read Rich Dad Poor Dad, and you're like, well, I need to get started with real estate, obviously. And everybody who reads this book, almost everybody, immediately concludes that it's single family house investing, and many people decide to go that route. They start wholesaling or flipping or landlording or whatever the case may be. And then they realize sometimes after many years that they're never going to get there. They can't scale it, or they built a portfolio that's a nightmare to manage. And they realize that they can't get there. Now, like, what is wrong with this? Robert Kiyosaki said, real estate should get me there, and it doesn't. And it's surprising because everybody talks about flipping and landlording, the Burr method, and no one actually talks about the fact that you never get to financial freedom. This is irritating. And I was in the same route. I flipped 36 houses in pursuit of this financial freedom thing, and it never came. And what I've found since then is that people they might start with single family houses, but they then quietly switch to multifamily, and within several months, a year or two, all of a sudden they're quitting their job. And I realized this only after having interviewed dozens and dozens of people on my own podcast, that this was a pattern I was happening over and over and over again. And now, having trained hundreds of people to do their first deal, we now know that you don't necessarily have to invest in single family houses. You can go right in apartment buildings. You don't need money. You don't need experience. And you have essentially multiple career paths within that investment asset class. And you showed one career path, which is basically you gravitate towards raising capital. You're an extroverted guy. You love talking to people. You're really excited about the investment. And then there's others who I'm a little more introverted, a little shyer, but I really like numbers, and they are able to find deals. And what happens a lot of times is those two people joint venture together, and now they're both financially free, right? So it's this surprising thing that we found over the years, that apartment buildings, which used to be or perceived as an advanced strategy, actually is the great accelerator to financial freedom.
Absolutely. Yeah, it is really amazing. A lot of people, just what you said, think that single family is going to lead to financial freedom, and it really doesn't. I mean, that was really my story as well. I got to have 4 or 5 houses and just realized it was a ton of work and it wasn't scalable. And then I have this cousin who was like, why don't you consider multifamily? And then I got in touch with some of your stuff as well and your materials, and we partnered together on some deals. And it is amazing how you can just scale. And it's really not that much harder to do a big deal than it is to do a little deal. And I think a lot of times we're only limited by our own thinking about it. So why don't you share a little bit of your story? You said it took you 15 years to get there, Michael, but you're there and then some, and then you've helped many hundreds of people or more thousands of people become financially free. So tell us a story about startups, and I know you had some restaurants, and tell us that story.
I mean, look, when I read Rich Dad Poor Dad in 2004, late 2004, and it really changed my life. I wish someone had given me the book in whenever it came out. It might have been 97 or 98. I don't remember when it came out. But it really changed my life, and I really wanted to pursue financial freedom. But the book doesn't really tell you how to do it. It kind of puts a seed in your head, and then you flail around like I did. And so to me, I flipped a couple houses. I learned how to trade stocks and options. But my big idea was restaurants as a cash flow business. Well, I now know it's a cash business, not necessarily a cash flow business. And I had a bunch of money from a software IPO. I have a software background, Bronson, and I thought it prepared me very well for real estate. And so I plowed that into the restaurant business. It was a pizza franchise actually out of Southern California. And it didn't go so well. I subsequently lost everything. And I had flipped a couple houses before the recession. And then the recession, of course, created massive problems for me on the restaurant side. And then I kind of clawed myself out with real estate, thinking, well, how flipping houses is a way to do that. And so that's kind of how I started getting out of my situation with the restaurants. And this was the horrible time, as I was working flipping houses while trying to get out of the restaurants. So I'm running 6 restaurants and I'm flipping houses at the same time. So I'm making money on the house flips, losing money in restaurants, and working like 80 hours a week. It was awful. Like literally, basically not making money at all, and working 80 hours a week, like the worst
Sounds
of
terrible.
all cases. Until I accidentally got into an apartment building, which was also a nightmare. But once that quieted down, it got really boring. It just sent me $1,000 every month, and while I'm flipping houses and I'm trying to sell my restaurants. And finally, I woke up and I was like, man, this apartment building just keeps sending me mailbox money. Meanwhile, I'm slaving away on my restaurants and flipping these houses. What is wrong with me? Like, what kind of financial freedom is that? Is that really what Kiyosaki wanted? Was saying in his book? The answer is no, it wasn't. None of those things were. But I didn't realize that, right? Because it's not like, well, And so anyway, so I finally shifted, and I said, I need to do more of that and less of this. And that's kind of when I started moving, basically full-time in apartment buildings. Took me a while though.
Yeah, now for a lot of us, it is a journey, and I'm sure people, listening or watching, it's just like, I just want to get there, and I'm not quite sure how. And there's this process of really building your skills and working hard and trying. And sometimes you feel like you're spinning your wheels, like it sounded like you were, with the restaurants and flipping, and there was a lot of the things that you did. But let me ask you this, Michael. What would you say is the biggest obstacle that people find in becoming financially free? They want to do it, but what keeps people from actually achieving financial freedom to leave their job?
It's ignorance, really, but it's not their fault. It's you look at the HGTV house flippers and you're like, oh, I gotta flip a house. You go in bigger pockets, see the Burr method. Well, I gotta build up rental portfolio, right? Meanwhile, while apartments might seem cool, it's considered an advanced strategy. So it's really not knowing enough about it. And that's what we're trying to change with our podcast and our book. It's called Financial Freedom with Real Estate. And it's really those perceptions. I think this is going to work when it doesn't. And I don't think that's for me because it's too advanced, which is also incorrect. What we now know is that apartment buildings is not necessarily an advanced strategy. It requires a little bit of education, but you can get right into apartment buildings without any previous experience. You can appear very experienced in about 60 to 90 days, and you don't need your own money. Because you can learn how to raise capital, which you did. You raised millions of dollars, right? So, and if Bronson can do it,
if this token bald man can do it, then anybody can do it.
Anyone can do it. And
Exactly.
you're not an outlier either. I mean, there's many people who have raised million of dollars, not ever having raised money before. And so it's a surprising thing, and that's what we're trying to change. Is people who want financial read that purple book. Let's skip the single family house investing and go right in apartment buildings, because it's not that hard. It's all up here. It's all a perception of what they think it is.
Yeah, it's amazing for me. Something really went on in my mind when it was like, oh, wow, I can do this and I can actually raise money. I remember when I raised my first $100,000 from an investor I met at a meetup, and he was like, I had invested in one of your deals. I was like, oh, I don't even have a deal. I got to get a deal. And so then I found a guy who had a deal and I partnered. But it's amazing how syndication, it's like a puzzle pieces, right? You just have to put the puzzle pieces together and you're able to get it done. So I know you're just like, you and I both are just huge multifamily fans. It's absolutely changed our lives, in amazing ways. But what are some advantages you see of just multifamily investing in general? Let's say somebody's going to invest passively or somebody's going to get involved. What are some of the other advantages that you see?
Well, one is you can invest passively, right? So let's talk about both the passive and the active. There's nothing better than multifamily as a passive. And the reason is, obviously the comparison is the stock market. The stock market is very volatile. If the stock market tanks 6 months before you need money for your kids' college or your retirement, you're kind of hosed, right? It's a timing thing. Well, it's going up now, but what about 5 years from now? I'm not sure. And so therefore I can't make any reliable planning. That's frustrating. Someone trying to create a financial plan for your family. Number two, that doesn't generate cash flow unless you're doing advanced, and trading options and iron condors or whatever, which I did. Super fascinating, but they don't really generate cash flow. So I can't actually quit my medical practice or my law firm. I don't have an exit strategy. That's irritating. And then number three, every time my broker sells something, I got to pay capital gains on it. So this is what we know as investing when multifamily syndications address all those things. There is much less volatility. It behaves very, very well in recessions. Number two, it generates cash flow, significant cash flow that I can actually use to quit my job like you did. And number three, it's the tax advantages are insane. If you play your cards right, you never pay any taxes on the gains. So that makes multifamily syndications one of the best investments in the world. The only ones I like similarly is mobile home parks and self-storage from a risk profile, cash and tax benefits. From an active perspective, I don't like those two asset classes because the people who are successful in those have to actively manage those assets themselves. And I don't want to become a manager. Therefore, by default, multifamily wins because I can put a professional manager to run that. And if it doesn't work out, there's another two I can bring in to do that for me. So therefore, it truly is a very passive investment. And so that's why I like multifamily. The other thing I like multifamily and commercial in general is I can control the value of the building. With houses, as you know, a recession comes along in 2008 and I have no control over my building whatsoever. But with commercial, I can do stuff and raise the income, and so doing raise the value of it. So I don't need the market go up. I can actually create value in an even market or even a down market. I don't need the market to go up to make money. And so I like that. I like the fact that you can get debt loans on it that I don't have to personally guarantee like I did with the restaurants or the single family houses. All those things are very unique in multifamily syndications. So for both, if I want to become active as an entrepreneur or I have money to invest and I'm looking for an alternative stock market, that's why I like multifamily.
Yeah, it's great. No, you mentioned a whole lot of benefits. I think I'm not sure if you mentioned it as well, as in the inflation hedge that's there with all this money printing that's happening. So the ability to actually hedge and not only get the tax benefits and get all the gains and growth, but you're also able to hedge yourself in case inflation picks up. And we're seeing it. We're seeing right now some of these multifamily buildings we're selling a little early for just really high profits, which is amazing.
Well, let's talk about inflation. I mean, that's a good point. Inflation hedges is more relevant than it ever has been. Certainly a year ago, inflation, what is that? Well, inflation is a real thing. You see it literally everywhere. You see it now, of course, in the price of gas, price of used cars, price of construction material. Rents, by the way, have gone up in Atlanta 10% in the last 11 months. Like, it's insane. Rents, and it's not just Atlanta. It's just an article I saw. Right. So in an inflationary environment, you want to hold real assets more so. I mean, gold, real estate, something that has real value, not paper or stocks even, but something that has real value. Because here's what happens is when rents go up in an inflation environment, everything goes up. Well, rents go up and expenses, of course, go up. But because the rents are higher than the expenses and they go up by the same margin, as time goes by, it creates a gap, which is the net operating income. And so the higher the net operating income or NOI becomes, the higher the value of the building. Therefore, the higher the inflation is, the more the building is valued. And so therefore, I don't care if we have 10% inflation, because that means my property is going to be worth a lot more before, versus if I'm holding dollars, use dollars or something, or cash. Well, inflation is going to eat away at that. So real assets is what you want to hold in an inflationary environment.
Absolutely. It's kind of a double positive, right? Because you said, the rents go up. There's kind of a general hedge that as even costs go up when it comes to running an apartment building, it generally increases rents, but your debt, especially if you have longer term debt, it stays low. So that spread, like you said, gets even bigger and bigger, which is huge. So obviously we're huge fans of multifamily investing. There are risks with every investment. There are downsides. What do you say some of the disadvantages of multifamily investing are?
Now, there's one major one, and that is your investment is relatively illiquid while you're investing, right? So you can't call up the operator going, "Oh man, gosh, that money I invested last year, I really need it. I'm getting a divorce right now, and I need that cash back." Right? You can't call your broker and say, "Yeah, I want out." Now, of course, the operator may try to get you out anyway, but the investment is typically tied up for whatever, 5 or 6 years. So that really is the main disadvantage, I think. Was there another one that comes to mind for you?
No, I think that's a disadvantage, is obviously the illiquidity of it. There can be, sometimes markets move in different ways. Obviously, I think you and I, we both buy in areas where population is growing and jobs growing, and there's things like that are important. I did just have somebody on the show recently who was talking about, according Mueller, was talking about the tokenization of real estate, which some people believe in 5 years, all the syndications are going to use tokenized stuff because then it allows for liquidity. So you actually can sell in the middle of a deal, or you can take money, you can kind of refinance yourself out of it kind of through a banking thing. So it's really interesting. I don't know. It sounds a little bit above my head, but it's obviously
Yeah,
interesting. It
I
might
mean
take
that's
away some of the
I mean
disadvantages as well.
that's a good point. I mean, but the laws would have to, would have to catch up to that. Yes, it's technically possible, right? But it's you can't just swap something for another. Like the partnership would have to agree to that, for example. So the laws would have to catch up to that.
Right.
But there's ways around that. The liquidity is an issue. For example, you can create a fund. You can invest with an operator that has a fund, and maybe that fund buys 3, 4, 5 different properties. Well, when that happens, there's liquidity within the fund. So we're thinking about that as well, because it's the one remaining objection. Oh my gosh, but I can't get my money back for 5 years. Well, what if I need it before? So now we can have a fund, and so there's an advantage. One way to address that concern.
Right. And I think of one other, I wouldn't say necessarily disadvantage, but you may have found this too, that people either have time or they have money. So they used to have a wealth of something, right? It's either time or money. So if people don't have money, but they have time, and even somebody, like myself, and even for you, you're working full time and still finding a way to hustle on the side to build something where you actually go into assets, it's an amazing way to do it. But if somebody doesn't have a lot of money, a lot of people think, oh, I don't have the money, so I can't do it. But what I love about what you teach and what a lot of folks are talking about is that you don't necessarily have to have money to be able. I remember when I did my first big deal, I got the acquisition check for like $44,000 or something. It was amazing. It was like, wow, this was like a few months of work, and that was a nice little side gig to get. And I think when people start seeing that, wow, when you scale, you can get that kind of money, it is really amazing.
Well, it really is. I mean, if you have money to invest in, you can be a passive investor, right? You're in that I quadrant. That's where we all want to be. But what if you don't have the money to invest, right? And also, multifamily allows for an opportunity to get started in that case, like you did, like I did, the majority of people really get started not having a lot of money, and they have hustle. And so 100% of people do this on the side as a side gig. That's how it starts. They're all full time. They're working full time, and they're spending 5 or 10 hours per week doing this on the side, and then they first do their first deal, and they get this acquisition fee. They're like, wow, that's pretty amazing. I think I'm going to quit my job because I got this whatever $40,000 acquisition fee, and I have several months of runway, and I have this pipeline. I got like 2 deals I'm pursuing, and I'm thinking one of those two deals is gonna hit. Therefore, I got a pipeline going, and so a lot of people at that point quit their job after that first deal. Sometimes people wait a little longer, but certainly by the third deal, because they progressively get bigger and the acquisition fee get bigger as well, people are able to quit and then focus full time on it. And the beauty of it is you can stop whenever you want. You can certainly put it on hold if you want. You can go on vacation for 60 days and come back to it. Hey, plates are still spinning where you left them. And it doesn't take any more work to simply continue to buying more deals and having your property managers, manage that. So that's why, we have 5 people managing a portfolio of $208 million. It's the model it's unbelievably unique in the world, where you can continue accumulating a multi-million-dollar portfolio without working yourself to death.
Yeah, it really is. It is very unique. You touched on something, Michael, that I think is really, and I know this is a passion of yours too, about when is the right time to leave your job. And that's something that I wrestled with. I was going to leave before COVID. I had enough deals in the pipeline. I had some income and some liquidity. I decided to hold on and just left more recently because I just had this great gig where I was getting paid super well to work 20, 30 hours a week. So sometimes there was a chance to kind of go part-time. But then I realized that the upside was so much higher to do more deals, create more content, attract more investors, and go at it this way. I mean, do you have an opinion on that? Or I know you've watched people kind of very early, like, I've decided I'm going to take out $30,000 in debt and do a program and just do it. And then they do it and they make it. And obviously not everybody makes it, but then there's people that have just probably wait too long, right? So like, how much is enough? So how do you kind of talk to people about that?
Yeah, there's definitely a spectrum of when people do it. I mean, I have a lot of respect for people who, basically burn the boats. They quit their job, not having any kind of deal. They got a twinkle in their eye, and they quit their job, right? They burn the boats. And I wouldn't necessarily recommend it. However, I respect it, because what happens is these people almost always succeed because there is no plan B. Once you quit your job and you taste freedom working for yourself, it's very hard to go back to a job, right? Very hard. And so therefore people can feel, oh, well, if it doesn't work out, you can always go back to your job. But in your mind, that is not an alternative at all.
Right.
Versus if you're working and you build this on the side, if it doesn't work out, well, you just stay where you are. Like, it's like no harm, no foul. Like I said, most people tend to quit probably after their first deal, certainly by the third. but certainly after a lot of people after their first, because they want to show to themselves that this is going to work for them. And then typically they have this acquisition fee, it extends their runway, and then they have that pipeline of deals and they see it. They start to see it and they're like, my gosh, if I did this full time, I could accelerate this versus doing this 5 to 10 hours a week. I can actually get results a lot faster. And that's typically what happens. So typically the faster you can leave your job, obviously the faster the results you get. So people might have 6 months, 9 months, 12 months of savings saved up. I'd like to say, give yourself 12 months runway. Some people have done it in 6. It's a little aggressive, but like I said, I mean, that really, really motivates people. 6 months, and you got to get your deal in 6 months. You better hustle. I mean, you better not be sitting there eating bonbons and watching Netflix. You better get out there, call brokers, and talk to capital investors. So it's a great motivator.
Yeah, it is. It is. And it is interesting how a lot of these deals pay. You get paid, to be a part of a deal, you get paid some up front. Maybe it's 15 to 20% up front. And then a lot of it's kind of at the back end or kind of as you go. And so, you have all this net worth, all this stuff that's grown, but it just takes a while to finally get there. So a question that's a little bit related to this is, again, a lot of people are new to this. They're new to hearing about you and what you do. But what would you say is a good first step for people that are just, what do I do? What's the next step to try to learn how to do this, how to do multifamily?
Yeah, but a couple things. I mean, one is I would recommend my book. It's yellow. It's the yellow book on Amazon, Financial Freedom with Real Estate. It's $10. It's a great foray into syndications. And it will address some of the issues I talked about. I don't have any experience. What do I do? I don't have any money. What do I do? And then it kind of goes through the mechanics of finding and analyzing deals and raising capital. I find that a lot of people, once they can visualize it, it changes things in their mind. It makes it more, because you have to believe, right? If you don't believe in something, why would you ever take a step in that direction, right? It makes a lot of sense. You have to start believing in that. So the book is a great, and the podcast is exactly the same name, Financial Freedom with Real Estate. We talk to people who have quit their job. We want to know, well, gosh, how did they do that? How do they do their first deal? How do they find it? How do they raise the capital, right? And so those are two great resources.
Yeah, so we really talk about there's two ways that people grow, and you mentioned kind of, both of them really, networking and education, right? So education through things like books or trainings or things. I know you have a bunch of great trainings. And then live events, there's meetups. I run a meetup in Southern California. You have your live event called Dealmaker Live, which is in the summer, which is a great event. There's other events for multifamily. And I think I actually just recently went to an event about YouTube with some of these really young and awesome YouTubers. And I felt a little bit out of place, but really that's the area of highest learning, right? You get on people that are at the top of their game in the industry and you don't know how to do it. And that can feel a little uncomfortable, like, oh, I'm a little bit of a fish out of water. But that's how you change where you want to go, right? You get around people that are already there that have done it. And I think that was really a big step for me as well. So, Michael, why don't you tell us real quick, what are some ways people can connect with you, whether they want to do their own deals or invest, or maybe you can just kind of touch base on how people can reach out.
Yeah, the website is themichaelblank.com. And again, everything is there, our YouTube channel, podcast, the book. We have a lot of free resources on YouTube and blogs. So it's a great place to get started and learn more about this.
Awesome, Michael. Well, I just want to really honor you and commend you. I mean, you're, a big part of the reason that I'm financially free and on the path that I'm on. And I'm just so grateful for your friendship and how you've helped in the ways we've partnered together. But I love how you really approach life and people and real estate with an abundant mindset, that it's not like, hey, if I help you, then the pie is only so big. The pie actually gets bigger. We can help each other. And so I've really appreciated that abundant mindset that you have and the way that you really genuinely want to help people become financially free so that they can be living a life of significance. So thanks so much for joining us today. And I look forward to connecting with you again soon, Michael. All right, so this was a great interview, really how you quit your job in 1 to 3 years. Obviously, I did it. It took me about 3 years, and I was able to leave my job, which was awesome, right? To be able to leave a job that maybe I didn't enjoy or wasn't challenging anymore really allowed me to do the things that I want to do. And so at the end of the day, why is financial freedom so important? And I really think it comes down to freedom of your time. If you actually have time to do what it is you want to do, or you feel really is in alignment with your values, then you actually are financially free. If you're just simply going to a job that you hate, or you're doing it because you have to do it, or you get paid really well, but you have to go in and work the hours, you're not financially free and you're probably pretty miserable. So I think it's really important that whether it's through this or something else, it's just continually important to educate yourself on new things that are out there. And it's really important to take action. So from this video, if you think of one step, whether you're like, hey, I'm going to go to a meetup, I'm going to start looking at properties, I'm going to get in a training program or a mentorship, really, really, really important. Or maybe you're busy and you're a passive investor or interested in passive investing. You can always check out our deals. We have a deal investor list, and we develop a relationship with people, bronsonequity.com. You can check that out. But there are other groups as well that have lots of deals. There's lots of deals happening these days. So anyway, I hope this was helpful to you, and we'll look forward to seeing you on the next one.
You've been listening to the Mailbox Money Podcast. For more free resources, articles, and videos, go to bronsonequity.com. There you can download your copy of the special report, The Single Best Investment Strategy During and After a Pandemic. None of the information shared here is an offer to buy a specific investment, and this is for educational purposes only. Consult your financial, legal, and tax professionals and use your own common sense before making any investment decisions. Thanks for joining us, and be sure to tune in next time for more Mailbox Money.